Yeah, I mean, I guess I was alive for the Hunts brothers, but don't remember it well. But yeah, it seems like it's almost unsustainable at this point because what else could drive it higher? And I think that's what people are racking their heads about. And we've talked about positioning now being stretched, either RSIs or call, skew. All that now to me tells you it's just a very tough proposition to buy at this level and expect to have further gains. But look, it's not just the geopolitics, it's not just the Fed. You have a lot of supply and demand issues. There's mining issues, there's production quality issues for silver, which is helping contribute to that outperformance. But overall, you just can't grab as much. There's been underinvestment, and you can't grab as much as you need right now to match the demand, both the physical and the speculatory stuff.
Well, so Ed Yardeni was making the point this morning that it's one thing to look at gold, but central banks, for example, aren't buying silver. They're not buying copper. I mean, what's driving those gains in the sense that, you know, it's not really the industrial production either, is it?
Right. Well, yeah, a little bit, because copper and silver both get the bid from the electrification of all things. Copper clearly the forefront of that push, which we've had now for multi-years. The AI story with the data warehouse, data center build-outs, and all the kind of grids needed to connect them is big on copper, and silver is big on the solar panel stuff. So there is an industrial demand pulse. You got the jewelry side of it too, because as people can't afford gold, they switch into platinum and silver. So there is that retail bid from India and China and everywhere else in the world. So there are actual things in the physical level that give you confidence that this is a trade that has some real fundamentals. But again, I think what's happening is people are chasing on, there's a lot of speculative froth, either in futures or in option markets, which are helping drive this exponential chart look now.
I mean, when I hear about copper, I think of China. Just because it used to be, you know, Dr. Copper. When China was growing copper demand as well, they were building, you know, all the ghost cities and everything. How related is that, and how's China doing right now?
Yeah, so the actual marginal buyer right now is funny us because of the worry of tariffs. So if you look at the COMEX LME spread or even the Shanghai, it's as wide as it's usually ever been. I think we've come off from summer highs as Trump clarified where that tariff rate would be. But to your point, the Chinese industrial production bid is for copper right now has cooled because obviously we know their growth is slowing. Everyone's moving copper here in America. We have the highest inventories we've ever had here with expectations that that gap, because of the tariff, will be finalized at some point in the future, making it the good trade to do.
Michael, talk to us about the difference between copper on the LME and copper on COMEX, for example, or elsewhere, in the sense that, you know, we saw that squeeze, remember, in London earlier in the year. I mean, have we seen prices continue to go higher even after a squeeze? Isn't that very unusual?
So we had the correction as they had clarification of what the tariff would actually look like, but there's still an uncertainty of where that final rate will be on the processed copper. And to your point, it's come back up after this massive drop. It's an interesting chart if you look at that spread between the two. But, you know, it's all interchangeable. It's just a matter of getting a ship and bringing it over here because it's effectively more economical.